Good consumer pain index day, warriors. Everyone ready to react to the reaction? Keep in mind that when we're getting more benign inflation numbers, it just means that the high prices we pay are slowing down. Don't think that we're ever going to go back to where prices used to be for things that we use. How you doing, Bran, AJ? They may go down for things that we own, but not things that we use. How Michael, Ryan, Shahab, Bran, Hump Day to you too, Blake, Marcus, James, the whole crew. Okay, Bran likes consumer pain index. Okay, so let's take a look at Euro. Crack that line. This is a weekly trend line. I think Blake has it too. He copied me. Can't blame him. People have asked me, Dale, how do you draw your lines? Well, this one not that way, but usually with my imagination. But there's also this diamond formation, okay? And I learned it from somebody else. Peter Brandt had this as a diamond. So it's breaking out. Okay, that's all I could say. They tried to turn it back. They can't. Um, you know, I'm bullish. Blake's long. Everyone here in the room, we haven't been talking
Uh,
about we haven't been talking
actually, I'm
about
not.
the long side of the dollar. You haven't heard the word long and dollar connected by me in several weeks. So there you go. There's a breakout. What do you think, Blake?
You
Breakout?
know, it is a breakout and it looks really good, but I'm not long anymore. I
Oh,
know.
okay.
I know.
But look at but
I took it
I
off
do that all
yesterday.
the time. I do that all the time.
Yeah, but
You
I'm
know,
still short dollar Swiss. So it's like I was
oh, you
I
lightened
felt
up. Yeah.
yeah, I felt doubled up on the position. So I took the euro as we were approaching 110 yesterday, and I just kept my dollar Swiss short. So,
Yeah.
well, because that's more of a risk off in case the as Paulie used to say, the wheels would fall off the caboose. You know,
Yeah.
if something like
What?
that happened, then Swiss would strengthen a little bit further than the euro
Yeah.
would strengthen.
So Nuno's saying melt up coming. Well, you know what? Everyone's flipped to it. That the melt up is coming, that we're going to get new all-time highs. Okay. He doesn't get up early. Okay, that's the problem with Peter. It's hard to get. Um, so, you know, this low right here, there's one thing we know about this low is that underneath it there's problems. And I've talked about that. Maybe we end up with a third drive up here, up at new highs. That's possible. But I can't help thinking that one day buying the dip will not work. Okay. And most of the people I know are looking for new highs. Even the bears don't think that we're going to peak until, I don't know, September, October. So what a flip in 7 days. Sentiment is not uh, panicky. So we'll see. I put my toe in the water yesterday. Probably wrong again. Every reversal, uh, every top has ended up with a new high. I think one day it might be different. Maybe it's this time because even I'm looking for this, right? We move upward till volume returns. Okay, it's possible. Um, Aussie, I shaved a little at 66, thinking it was gonna come off. I still think it's gonna come off. Um, just in Canada, still looks okay, but look at where we stalled right at the 4 hour. I'm figuring 65 is possible, and you should be a buyer if that happens. That that's it. Canada maybe will bounce. Did the pattern in place survive this last little dip?
No, I actually took it off
Oh,
when it broke down. I mean, it
okay.
was just, broke
All
through
right.
137.20, and I'm like, yep, that's it. It's
Oh,
just yeah,
yeah.
it's funny because it played. I played it long off of the 2020s level, probably like several times. Just kept buying it down there, and then finally it
Yeah.
broke.
Yeah.
But
Maybe
you
we
don't
get. Maybe we
with
get
this. I was just going to say with this data today, I mean, we saw this we saw this dollar weakness, but what if CPI is, firmer? I
a
mean,
little hotter. Yeah.
yeah, I mean, it could really turn everything. So anyway, it's just got to be careful.
Maybe it maybe it pulls pops while crude is pulling back. So I don't think crude should get back beneath 76 for the bullish scenario, and we still need 83 for a breakout. So maybe we get a pullback here. That's halfway. I would try it.
Well,
Uh,
there's all these peace talks happening right now, and peace talks. I guess maybe I should rephrase that. There's talks going on right now,
about
and
Gaza.
yeah, and if successful, I mean, that's going to take some of this upside pressure off of crude oil.
Oh,
If it fails by the weekend, I mean, crude's going to be trading in the upper probably upper 80s by next week.
okay. So if they get a peace deal in Gaza, that means the escalation with Hezbollah and Iran is pulled off the table. I don't think that would be the case. Do you?
I don't know. I don't know. I mean, but
I don't.
you would think that well, it's obviously an either or, and I think crude oil is going to be a direct
Yeah,
um beneficiary either way, obviously to the upside or to the downside. So, you
yeah.
know, your guess is better than mine, honestly. So I
No,
don't know.
they're the same. Okay. We'll see what happens right in the middle. It's in no man's land. So
Yeah.
you decide if you're bullish or bearish oil. I don't. I think Gaza agreement or not. I never thought Iran and Israel would be a one-off. It's not going to be. Um, I want to go
Yeah,
to.
you've constantly said that it's going to escalate, but we are at a point right now in the market's eyes that it's an escalation from here probably will put crude well above 80, and then
Yeah,
obviously if some ongoing talks throughout the weekend, and that seems like it's going to continue to be the case, then crude will slip because there are obviously recession fears still lingering
that would
around, and I think that's what's
put the
weighing on
nail
crude.
in. That would put the nail in the coffin. So it's not a demand problem. It's going to be a supply shock problem.
Yeah.
So yeah, that would put the nail in the coffin for consumers that are already have record credit card debt.
Yeah.
So okay, I want to talk to Ryan and see how he's doing. I want to hear the accent. How are you,
I
Well,
want to
good
Ryan?
hear the
morning there,
accent.
Dale. How's it
The
doing,
accent.
Dale?
I was curious. I think Blake brought something up that you were looking at something in gold. Are you still looking at a possible top pickup here?
Yeah, I think this is looking similar to oil. We're up here on the risk factor. You know, you can try shortening it up here if something doesn't happen, but you got to be prepared to get gapped up if there is a sudden off headline. So
Okay.
it's poor risk reward. What I would look for is if we get some sort of bad headline, is it going to be something that's really severe and damaging, or is it just another something that Iran does for show, flexing their muscles, but it's not really catastrophic. If that's the case, we get a pop, and everyone who's been sitting long up here will TP into that, and then we'll go down again, much like we did back in April. Similar price action, get a spike and it slams down. So
It's
yeah,
pretty
I would.
cool. Go ahead.
I'd wait for the headline. before I short
So
it.
you're waiting, like in the old days, what it used to be, like in the Gulf War, gold and oil would march upward
Yeah,
until the initiation of hostilities, and they'd put in a peak, and the bonds would put in a bottom. I've seen that a few times. We're not getting that kind of action now. I'm kind of thinking that when something happens, it's not near the end of the move, but it hasn't been priced in, I don't think, by risk and equities, or maybe priced in gold,
maybe.
not priced in oil. That'll
Your
be,
line you've
huh?
got there, that blue line, that
Yeah.
first touch point in April was when we got the last Iran thing. Where remember they lobbed over thousands of drones and whatever,
Okay, so it
and
peaked
they all
on
got
that.
shot down. There wasn't
Yeah.
much damage, and I don't think
Yeah.
anyone got killed. And that was it. You got a spike, and then boom, back down again. So I'm
It's
looking for that
almost
sort of similar play.
it's almost a fractal. Look at this. What do you see here? The only imperfection is this high did not take out this high. So
Yeah.
you can't call it a divergence, which makes it not a, second drive to a top. But if, I just imagined a little bit more of a spike, you have a fractal of a 3 drive, and on the third drive, it's like a 3.
Well,
So that could
the
be a good
question you got to ask
idea.
is why have we, even with these risk headlines, why have we spent 3 days not being able to get above that high?
Yeah, and with yields dropping and the dollar weakening, what's it waiting for? Great
Yeah,
observation, man.
someone's sitting there, aren't they? There's a reason someone was sitting there the first time, the second time, and there's someone sitting there the third, fourth, and fifth time. So,
Yeah.
that to me tells you there's some fundamental sellers in play.
Okay.
But obviously they'll get blasted out the window on a big headline. But that's the price action will be important. If we bust that 80 on the headline, come right back underneath it again, you
Yeah.
watch it will firm up as support as resistance once again.
Yeah. Yeah. You have some kind of stop hunt. You mean, kind of get uh, something like this, like what Canada did. It just
Yeah.
spiked up above the highs and gave it back.
Well, again,
Okay.
even like gold in April, like we're just showing there, there was the level there, I think was 2,400.
Right here.
So we were resisting into 2,400. We had the spike, came back below, held 24, held 24, held 24, had another little poke above, and then it went down again. So these
It's
patterns,
been
they repeat
laboring.
themselves. Yeah.
Yeah. The bullish interpretation is it's a cup. This is the handle of a cup and handle, which implies, if it is like 2,600 or so.
Yeah. Well, it's still in a shallow, very shallow uptrend. If you look at it from April, you've got your lines top and bottom there. It does show a very shallow uptrend, but we know China's not buying anymore, so that's a big brick out the wall. So now it's got to stand on its own 2 legs, really.
They're lying. Why are they telling us? Huh? Why are they showing? It's like, they're showing their hand to the whole house.
I
Here,
wouldn't
this
call
is
you
what
wrong.
we're gonna do. We're not doing.
Yeah, look at this
Uh,
hand, but don't watch the other hand.
yeah. Anyway,
Kabuki theater at its finest.
yeah.
Yeah.
Anyway, real nice thinking about, and you can't find the gold bear anywhere, Ryan. That's another thing. Have you heard anyone be bearish gold?
Apart from the usual crazes, no.
Yeah.
Everyone's
Okay.
talking 25, 2,600.
Yeah.
So yeah, let's
Okay.
see.
All right. Any thoughts on continuation strength in euro and another decent day in euro pound? I mean, it looks like it's flagging here. This looks like a flagpole,
Yeah.
and we're going to get some type of flag here. This does, we're correcting, but I don't think this is done. I think Grega would call this impulsive. I mean, look how it grinded, and then in a matter of 4 days, it covered months worth of price action.
Yeah. All down to the
That's
data.
yeah, that's impulsive. So
Yeah.
now
Well,
we're
I've got, because I've been short this from 86.13, so I was cutting it all the way down
yeah.
to that low drop. I was trailing my stop into profit, but I've moved it back above 86.20 because I think I'll add back to my shorts if we see that again up there, 86.20, those highs.
Now, I know we just got past CPI, you know, overnight, which came in obviously softer than expected, keeping the, you know, sterling under pressure. But we still have two more data points this week. I mean, we have GDP tomorrow morning, and then we have retail sales. Or do we have retail sales? Yeah, we
Yeah,
have retail sales at the end of the on Friday. So we still
Friday,
have
yeah.
two really key data points coming out of the UK. So has your I mean, how are you treating the sterling? Like, I think it's kind of range bound. I've really had no feel for it this week. How are you looking at it?
Well, if you look at cable, it dipped and came roaring right back. So that shows you what we're trading at the moment. All eyes are on what's going on in the US on that side of the pair. We couldn't get back to the break point at 128. You know, I've been saying 128 was a big hurdle, and we ripped right back above 128.50 again, and we're just sort of mooching around there. So I said it yesterday after PPI. If it was a hot PPI number, cable's probably the one that I'd look to buy a dip on. And I think the same will be the case for CPI. If we get a hot CPI number, a dollar rally, I think the market's going to hit a dollar rally like it does or has done for quite a while. So I think cable ripping back after a dip will be the one to look at again.
So Dale, do you have anything else you want to show? Because I'm going to take over and get us ready for CPI.
No, I'm just enjoying the colorful language of mooching around. That a
Mooching,
market
yeah,
would mooch around. That's got to be floor trader talk.
That's right.
Mooching around.
So, you know,
I
I
like
guess
it, Ryan.
one of the things we should, you know, obviously note, and everybody should know this, is, you know, we have a big triangle break in the euro. I mean, this is a big deal. I mean, there's it's a big breakout. It's a breakout yesterday. It was actually a closed breakout above 110. Or a 109 and whatever change it was. You know, so that flag points us higher. So as Ryan points out, any like strong data that we get from CPI, we might see a bounce in the dollar index, but you want to sell into that, because let's face it, the Fed's probably going to cut in September regardless, even if the headline number, Ryan, if it drops below 3%, or excuse me, a little hotter than or hotter than 3%, excuse me, if it comes in at like 3.1, if we do get a little bit of a dollar recovery, people are still going to expect the Fed to cut at least a quarter this next month. So
Yeah.
you prefer at this stage in the game, but selling any rip in the dollar, correct?
Yeah.
And I agree, because now let's talk though the opposite. Let's say CPI, you know, the headline number comes in below 3%. We come in like, let's say 2.8%, 2.9%. Where does the dollar go from there? Because the dollar does look like we are threatening a really big breakdown in the dollar. And you look at, let's go over to the daily chart. This, you can see it, it's in it's a red dashed line here, a break below that triangle support, and it's gone. I mean, we're going to be testing 100 soon. And with we just have, obviously we're just looking at inflation data, but with some of the employment data that's been showing, some weakness, it does look possible, doesn't it?
Yeah, I mean, I've been saying it, best part of a year now. Until we see CPI under 3%, because it's been 3% or above for over a year now, well over a year now. I think psychologically, for the market, seeing a two handle on CPI, maybe even the core as well, that's really going to cement, that the Fed is going to start cutting rates. So yeah, I think we get a bigger reaction seeing a two handle, 2.8%, something like that on CPI, than we do if we see a hot number. Because like you say, the market's going to go, don't care, Fed's still going to cut. Any dollar rally, we're going to smack it on the head.
Yeah. I'm with you. I'm gonna be probably playing into that. Charles writes in, Swiss is not supporting the euro move. The Swiss right now, keep in mind, the Swiss is more of a how should I say it? It is more of a risk on, risk off currency at the moment. And even though I'm short dollar Swiss, I shorted it this week at 86.98. That's my current price that I'm short. Because if you watch the week ahead video, everybody knew, that I was looking to sell into strength here. So the fact of the matter is the Swiss franc isn't going to strengthen unless Middle East or Russia Ukraine situation starts to worsen. If we start to see an escalation, that you're going to see the Swiss franc strengthen. So I think that the Swiss franc is more of a product of what's happening, geopolitically versus the FX response to data that we've been seeing. But I don't think that, I'm kind of like in Dale's camp. I don't think that everything is going to get necessarily smoothed over. I need to, the proof has to be in the pudding. We have to see that really take place. But one of the other things I want to point out, and this has to do with risk appetite and risk aversion. Take a look at the dollar mex. I mean, the dollar mex is holding up very, very well, considering the bounce back we've seen in equities. And I'm going to talk about equities here in just in a second, because Dale, I'd like to get your thoughts here. The dollar mex has been holding up well. Its pullback has been fairly minor. We're obviously in an ascending channel. You look longer term, the dollar mex. Let me just pull this up really quick so you guys can see it. And if you don't know why we're where we're at and why we've stalled where we're at, this will probably help you out. This is the post-COVID lockdown spike highs in the dollar Mexican peso. Whoops. I drew that incorrectly. There we go. So there's the recent, multi-year lows. We hit the 38% retracement and stopped and reversed. Now, what's scary about that is we stopped and reversed where it should, but the pullbacks have been very minor. So what that suggests to me is that, this market is still very nervous. The carry traders are. You look at the Mexican peso, Japanese yen. It really hasn't bounced a whole lot. The dollar mex hasn't pulled back a whole lot. What that also suggests is any move above 20, you have to be. It's kind of like VIX. If you're looking at volatility in the S&P, if you're a stock market trader and you're like, well, when I see VIX, trade back above 25 or something, I know I don't want to be long stocks. Same thing with dollar mex. You see dollar mex pop its head above 20, and you are not going to want to be long anything, anything risk wise. And that's why I think the dollar mex is worth noting that it's not pulling back, and that is a warning to anybody who's just blindly long stocks, thinking that everything's okay. Now, coming back to the S&P, and this is Dale, these are the levels that I want to be on the short side. If you look at the S&P, we broke a major channel and trend line. We're coming back to the 618. 5470 has been key resistance that really been focused on since over the weekend, looking for these levels. And we're basically here. And you'll notice there's the 50 DMA underside of the channel or broken trend line. What do you think about buying stocks up at these levels, or should you be a seller? What do you think?
Well, I started laying out some shorts yesterday.
Mm.
So, more XLF puts, and I bought some triple SQQs.
Okay.
So
All right.
I'm trying it here, but I'm not married to it. In fact, you know what I was thinking, Blake? No one ever talks about fibs in terms of time. Okay. You can have a correction in time, just like you could have a correction in price. And the S&Ps were 14 down days from high to low completion. So
Yeah.
if I go all the way out and say 78.6 of the time that it took to get down there, that's the most, because 78.6 is the highest fib I use. That
Yeah, and
would
that's
take
that's
That
And
would
that's
take the
funny you bring
time.
that up. I don't, and just this is, somebody who learned Fibonacci's with a protractor back in the 90s. Like, that's how I learned. I'd never used Fibonacci in time. And it's not saying that you can't use it. And
Well,
I
I
know
don't.
there's a
I
lot of
was
people that
just
use it.
thinking about that if that break was real, that this recovery should, if it's just a recovery, it should take less time than the decline.
Got it. And
That's all.
that's why you'll see like people look at Fibonacci circles because they're looking at, Fibonacci in time as well. When I pay most attention to time is when I'm looking at chart patterns. Chart patterns, will, and because it almost comes with the idea that when you're trading, there's right idea, wrong time. I can't tell you how many times that we've as traders been in a position where we go, damn it, I was two
When I
weeks
think about
early.
time, Blake,
What's that?
well, when I think about time, when
What's that?
I look at the time and it's 10:30, 11 o'clock, and I know I have to be up at 4.
When I look at time, I
Huh?
look in the mirror and I
What
look
do
at
you do when that happens to you? What do
I
you
don't
do?
know, but I look in the mirror and I go, damn, I'm getting old. And then I start thinking
Oh
about
man,
time. So
I covered up all the mirrors in the house, bro.
all right, hey, listen,
All
we
right,
got just a few minutes before the data comes out.
Dave
I want to
Keller's
real
here,
quick.
so we'll have all our questions answered.
Yeah, right.
Dave's here.
I'm with Ryan. I really want to any strong data. Like you look at the euro, if the euro dips back below 110, I think that's a place to be on the long side. Also, if the data is strong and you see the dollar yen, pop up, towards 148, I think it's still a short. Any dollar yen move. And by the way, one thing that we need to be thinking about in the months ahead, Kishida is stepping down, the prime minister. A few here. I'll show you guys really quick. If you guys in Bloomberg, if you read this article, one of his top potential contenders is right here, Ashiba, and he looks for more of a normalization of monetary policy. That's like the headline you should be paying attention to, or the thing you should be paying attention to moving forward. Because if you have a prime minister that really supports, normalization of monetary policy, that's going to keep some upside pressure in the yen moving forward in the months ahead. So I look at the dollar yen. So give me strong data. Today, a little bit of hot data, get the dollar yen, back up towards 148, and I think that's a level you want to be on the short side. Ryan, what are your thoughts here? Any particular pair you're looking at as I get ready for the CPI?
Yeah, I'll be keeping an eye on cable, as I said. I'm long a bit of Kiwi dollar down here at the figure. So I'll be looking at that. Again, this might be one where if we get a bit of dollar strength, we get a decent dip in that might be worth buying as well, because it's lagging behind some of the others like cable and Aussie dollar and whatnot.
Wait, which one did you just say?
Kiwi dollar.
Kiwi. Okay. Yeah. And remember that we had the RBNZ, right? And
Yeah.
and they gave us a surprise cut. Don't forget, I should mention this really fast. US dollar, Norwegian krona. I think I remember I was on the trade-off a few weeks back, and I got made fun of by my colleague, Chris Weston, making fun of me, saying he goes, "Is that a major trend line?" I'm like, "It's freaking major, big time." And was shorting the US dollar, Norwegian krona up there. But now we're at like we're getting towards major support levels. So with the Norges central bank coming up, so any type of strength in the dollar here, you probably want to sell into ahead of the Norges central bank. I don't think they're going to be cutting this week. So anyway, that's just some food for thought.
30 seconds.
Oh shoot, we're already there. Damn it. All right, we'll just watch the euro. Here's the euro. Let's see what happens. And we'll go look at all the other markets. So here's the CPI. Damn it, I talked too much. Oh no, we have
Um,
another 10 seconds, Ryan. Come on.
I've got, I said 30 seconds.
Oh, you
That,
said 30 seconds. I didn't hear you with that cool accent that you got
well,
going
that
on.
5 seconds.
All right, all
Well,
right. 15 minutes.
zip it, customer.
Sorry. All right, here's the data.
Soft 2.9, core 3.2. So soft on
Wow.
the headline, two handle.
Wow. Wow. Look at that. Well, the euro is gonna look. Oh wow, look at stocks just creaming higher, by the way. Man, euro's moving.
Weakness.
That's that two handle.
Yeah, I mean, look at yields are just, dropping. You have the euro that pushed it punched higher, but really not a whole lot of follow through. And
No,
what's
the
really
No,
core,
interesting,
the core takes a bit of the puff out of it.
yeah, okay, all
I'll
right.
tell you the most important chart you showed that you didn't give enough attention to is that triangle breakout in euro. It's a massive formation, Blake. I think it's something like 1,300 pips, the width of that triangle that you tack on to a breakout,
Uh-huh.
and that gives you, I believe plus 120 euro.
Hey,
It's a big triangle.
look at the big. I'm sorry, Dale.
All right.
I would just look at the massive dollar reversal that we just saw after that data. Wow. Dollar yen is actually spiking up towards 147.50. Dollar
141.
Swiss just pushed up towards 86.50s. Or is that 88? Sorry. 86.50s. Sorry. And then the euro just slipped right back towards 110, which, surprisingly is giving me an opportunity to pick up some down here. So, which I just did just now.
Dave
Um,
Keller's here.
yeah. All right. Well, hey guys, real big responses in the markets, and all the data here is moving really slow on this screen. Different from what I'm seeing in on some other screens here. It's really, you can see it's like very, very lagged response. I don't know why that is. I'm going to pass you over to Dave. And just in the meantime, you guys be really careful with some of this data or the moves that we're seeing real quick. Very interesting responses. So I'm going to pass you over to Dave Keller. You guys stick around. One of the best technicians around, in my opinion, is coming right here on Face, and so I'm gonna pass you over to him. So Ryan, thank you for being here. If you guys aren't catching the Flow Show in the European hours, make sure that you listen to Ryan and on the Flow Show. Matter of fact, you weren't going to be here tomorrow, are you, Ryan?
No, I'm out of here.
You're out of here, but you know who's going to be on the Flow Show the next 2 days? Stelios. So
Yep.
make sure you're there listening to Stelios the next couple of days. Yeah, that's going to be cool. All right. And by the way, I picked up some euro at some pretty decent prices here. All right. I'm going to pass you guys over. Thanks, coach. Appreciate the day, and good luck trading, everybody. I'll see the ForexAnalytix crew. I'll see you guys in about 45 minutes on the morning edge.
Okay, thank you, Blake and Ryan. Good
Thanks,
session.
mate.
Nice prep for
Have a great trip, Ryan.
consumer pain index. And yeah, Ryan, I'm always saying goodbye to you. I keep I keep a box of Kleenex on my desk. Just
Oh
want to
well,
let
got
you
to
know,
know that for.
between you
Got to
and
know
K-Man, I'm always missing somebody. I miss you guys. But at least you don't leave at the same time. That would be devastating for me.
Yeah,
Okay. So
really.
just, all right. Is that a promise?
Yeah.
All right. Those guys will not be away at the same simultaneously. All right. Thanks, Ryan. All right, Dave. What a man to talk to with the big question being David Keller. After this turbulent period that we just went through where we bottomed and the VIX went to 60, is this going to be a failing rally, or are we just going to blow to new highs and the buy the dip people are right again?
Hey, starting with a hard question, Dale. I appreciate it.
Yeah, it's the
It-
most important question right now, isn't it?
No, it is for sure. And I mean, there's some really interesting push and pull vibes happening in the market right now.
Yeah,
Obviously a nice, upside swing, it feels like right after the CPI number this morning. You had a nice reaction to the PPI number yesterday, jobs number last week. I mean, the market is popping. It
yeah.
certainly seems like in reaction to economic data that implies that the Fed is sort of in the right place at the right time. The seasonality, and I would argue market history would argue against those things, which is if you're betting on the Fed to kind of get this perfectly right, that's actually an incredibly rare occurrence if you go back through market history. It's
Right.
usually too early, too late, and people can be a lot, very critical down the road about how they navigated a particular period.
Yeah, I
And
mean,
this,
unless we put Scully at the controls, no one's going to land that plane on the Hudson.
it's highly unlikely, right? So what that tells me is if they do kind of quote unquote get it right, you just have to be prepared for excessive volatility, which is certainly what, any measure I've looked at certainly tells
Okay,
you what we've
I,
experienced.
I want to ask you, for a long time, people have been saying to me, Dale, the VIX is broke. The VIX is broken. That's because it never went anywhere. So, that's why they thought it was broken. After what it did in one day, and then give it back in 24 hours, now I admit the VIX is broken. And it most likely was broken because people have been selling volatility forever. I mean, that's one of the reasons why I bought VIX calls. But they did not even, they just stopped trading them.
Yeah.
The calls, it's a rigged game. I was long the 20s, December's,
Oof.
and they didn't put any intrinsic value into them at all.
Yeah.
But more than that, just the fact that the VIX could do that in a 24-hour period. I know there were ETFs that were executing volatility selling programs. So
Yeah.
there's got to be, I don't know, some damage unless they just all went on strike and didn't trade it and didn't have to take their losses. Do you
So
know what happened there?
so what concerns me, Dale, is that, and I'm not an options trader. I don't trade options in my own account, but I've
Yeah.
spent the last, year talking with a bunch of options traders, longtime options trader who I feel like people that should know the structure of the VIX and what's happened should know. And I would say there's still plenty of confusion and lack of clarity in terms of what has happened. I mean, certainly the growth and the dominance now of zero DTE options has changed the
Yeah.
dynamic of the options market. I think that's undeniable. Things like the put call ratio don't look and behave like I think they have in previous cycles. And I think we
Okay.
might be seeing that with the VIX too. I mean, the reality, I mean, as a technical analyst, you're basically a market historian and you're comparing what you see now versus what you've seen before. And that's one of the benefits of doing this for a couple of years is you've started to see bull and bear cycles and you know how different indicators behave in different phases. And what I would tell you as a market historian is if the VIX spiked up above 65, which it did, and this is all the correction we have, and the bottom is now in, that would literally be the first time in the history of the VIX that has happened, where we've gotten above 40, above 50, to these levels, and it's not been a much more painful correction in terms of price and usually time as well. So
Interesting.
I hesitate to say this time is different because as a technical analyst, you learn that's usually a bad thing to say because usually the market rhymes with previous cycles. And that for me, I mean, I think just the excessive volatility certainly feels to me like we're in a correction that's probably not done yet. But I think the
Okay.
structural changes are profound and probably a lot more than a lot of us want to assume. So, I mean, I've started to honestly try to discount mentally what I'm seeing with the VIX, what I'm seeing with put call ratios, because I think the spike in the VIX is one thing, but the fact that the VIX remains so low, through the beginning of 2024, I think is part of that too. And times when it felt like volatility was excessive, but the VIX was low. And I always joke, my wife is a big fan of the weather and, like Weather Channel type of stuff. And she would
Yeah.
always be interested in the feels like number, right? So the temperature's 40, but it feels like 25
Yeah.
because of the wind chill or something like that. And I feel like the VIX was low teens, feels like 30s at times, sort of like the actual experience was way higher. And it's just one of those real upside down readings I feel like we've had here in 2024, and there have been others too.
Yeah, because 5% pullback in the S&P has never sparked this type of move before.
That's exactly right. And
Yeah,
so again, as a historian, I think, all right, huge spike in the VIX most likely means if you have any sort of rally, that's probably a counter trend rally, which again, what we have to remember is in bear phases, even short-term bear phases, the biggest up days you will find are
our bear
always in bear
markets.
markets, right? You think that would be in a bull market that you'd have these big up days. It's usually counter trend swings in a bear market when you see the biggest up days and the biggest upswing. So the fact that we're getting violent upswings right now doesn't surprise me, even if a correction is still happening.
Yeah.
This is actually pretty normal for a pullback that you would have these big spikes higher. So again, I mean the volatility feels pretty real to me. But again, as a historian, it feels like there's probably more to come.
I recall putting out a tweet before the top where I'm saying that the board looked strange to me, Dave. I mean, there were actually delays between trades, even in the uh, most liquid instruments like S&Ps. It's almost like
Mm,
they were trading like um, maybe an aftermarket during market hours. A
mm,
quiet board with time lags between trades. Do we have a liquidity issue
yeah.
here in the market?
I mean, it certainly feels like it, right? And I think there are structural challenges. There are a lot of times with new products. I mean, if you look back in history, not just new options and everything, but go back to ETFs, go back to decimalization, go back to sort of those big structural changes, those bullet points you'd think about over your career.
Yeah,
There have always been unintended consequences, right? So ETFs become incredibly widespread. But then all of a sudden, there's this concentration of capital in huge names. I don't think those two things are independent. I think those are related in some ways. And so when, big names change and you need to be weighted to a benchmark and there's a top-heavy concentration, it magnifies moves that probably were less magnified before. And so I think you're definitely seeing that with the options market. And again, I think the ripple effects are often really hard to predict. For me, I kind of go back to, I guess, the security blanket approach of just focusing on price and trend. Because the good news is those derivative indicators, like looking at volatility, looking at sentiment, are certainly imperfect in a lot of ways. But trend and price certainly seems to continue to be pretty valuable. And the reason why I think that's the case is you have a lot of algorithms that are out there. You have a lot of automated trading programs, but in a lot of ways they tend to magnify investor behavior. I would argue, right? They just tend to magnify things that would naturally be happening when we naturally overreact to everything as human beings. So I think that price still matters, and so analyzing price is probably the way to go here.
okay. So what are you implying by showing the similarities between April and August here?
Yeah, and
Trend
and don't
lines.
and don't assume I'm that bullish because that's what I feel like this chart probably implies. The reason why I think this is important is, I feel like a lot of times during a corrective move, which I think we're certainly in, right? And whether that's over or not is certainly the question I think we'll be answering here over the next week or two.
Yeah,
But I would say that remember that when a market is going down, which the S&P certainly is, I would say the primary trend in the S&P is now lower from mid-July to now mid-August. The question is, how do you know whether this was a buyable dip, whether that early August low was the low, or whether it was just a low, during a
yeah,
much longer downtrend? And I think part of that is you can try to anticipate it, right? Look for signs of exhaustion, look for signs of things being oversold, look for signs of divergences. And we saw a little bit of that, but not a ton yet, to be honest with you. The other way you do it is you sit on your hands a bit. You're patient and you wait for the market to tell you that the correction is no longer in play. And I think if you look back to, November of last year, which was
Okay.
coming out of the October low, we look at May of this year coming out of the April low, three things happened in both of those cases. Number one, if you draw a simple trend line, tracking the pullback, we broke above that trend line. Right around that same time, we broke back above the 50-day moving average. Right around that same time, we started making higher highs and higher lows, which tells you we're in a period of accumulation and people are once again buying on dips as opposed to selling, which is why you have this pattern of lower lows in all three of those. So those three things have not happened just yet, but I think there were clear exit signals from those corrective moves that if you're not sort of buying back into the rally by that point, you probably need to be thinking more on the long side than the short side because that's just the sort of primary trend I think at that point. So I think there are three things I'm looking for this week, and maybe we get that with a pop related to the CPI this morning. But I would say until and unless we get above the trend line using the July and early August highs, we get above the 50-day moving average, we start making a higher high and higher low. For me, it's still a corrective move, and you have to think of it that way. So I think I heard you mention you're sort of, thinking on the short side going into today. I don't have a problem with that because you're basically selling into this
Yeah.
resistance, this what we call a confluence of resistance, and betting on a bit of a snapback, continuing that primary trend. I don't have a problem taking that sort of bet on the tactical time frame and assuming that continues, and then the market's going to give you a clear signal if you're wrong, and then you adapt.
Yeah. Okay. Where does the red line come in? Around 5,500?
Yeah, well, it depends on how quick it is, right? So, I mean, if we would pop there today, yeah, it's around 50, we'll say 54.70, 54.80 would be about where we're at today.
Okay.
The longer you wait, obviously the slope
Yeah.
is going down here. So, I think the question is, do we get above that sort of range? And then at some point we will pull back. You always have pullbacks even in uptrends. And the question is, do we make a higher low? I think that if you're looking for the really buyable point, it's when we start making that next higher low, which tells you and confirms to you, okay, now we're in a period of accumulation. People are buying dips again, like we remember them doing for a lot of the last couple of years, and things are getting back to sort of that normal bull phase. Right.
Okay.
The other thing that we haven't talked about is just the seasonality. Again, if the peak was in July and if we had a strong August and a strong September, I can't tell you how incredibly unusual that would be. I mean, it's possible, but incredibly unlikely. Much more likely scenario is that you have a pretty weak August and a pretty weak September. And most of the time, major peaks have happened in sort of the July, early August timeframe. Here, there's a seasonality tool that I like to show. This is just looking at, it probably makes sense to start at the 2009 low. So we're going 2010 to 2023. This is the S&P 500, just looking at the seasonal tendency. So the number gives you the batting average, what percent of the time it's an up month. And then in the bottom, it's the average returns for each month. And you can see that the weakest 2-month period of all of them is August and September at about a coin flip 50-50 and average negative returns. These are two of the 3 months that have an average negative return. Then if you look at October and if you look at November and if you look at December, this is why you often have a Q4 rally. It's just it's very, very common. That's why it feels like that always happens because it actually almost always does, particularly November. So you often have sort of that seasonal weakness coming out of the summer. You have a strong, some sort of major low and then a strong rally. So we could rally here and have a strong August, but it would actually be incredibly uncommon. And so I've learned not to bet on uncommon things too much because it's highly unlikely that that's going to be the reality.
That's interesting. And July, being the most bullish month, was only bullish for half a month because if you didn't take it, it really wasn't that bullish. In fact, I think the NASDAQ closed lower in the month.
I was going to say July ended up being slightly negative, right? I mean, or
Okay.
very, very close to it, right? It depends on where you start the clock, but
Could you
at best, it
glean
was a flat
anything
month.
into that about market month when the market should have had its best performance, ended up not having good performance, which might be kind of a tell for what's coming?
I mean, if I would tell you this, right? I mean, if you look, this is a weekly chart going back for the last 7 years. If you look at
Yeah.
the average year, I mean, if you look at just pick a random year you had a
Yeah.
major peak in July or August. June is usually a little early, but if you
Yeah.
look at July or August, there's always been a major peak. Sometimes not a huge peak, right? Sometimes like
Yeah.
2019, where it was a brief pullback to the
Right.
200-day moving average before we continued. But most of the major, I mean, anytime we had a significant drawdown, there was that big high in July into August, August 22, July 23, and I would say July 24 certainly lines up pretty well with that August 2020, same thing. So, again, given the extent of the run, betting on the normal seasonal pattern to kind of play out to me makes a ton of sense. Assuming that that July peak was probably a significant one, I don't have a problem with that. And until the market shows you enough accumulation that tells you we're now exiting from that, summer doldrums and now entering a new period of strength, I'm inclined to more, be leaning to the bearish side and be more cautious, and bet on this still just being a volatile period that is unclear.
Okay. Really great looks and explanations for this, David. The bonds have been on a tear, yields have been dropping significantly. Do you have any upside targets in TLT?
Ooh, I was gonna say, I thought you were gonna say in the 10-year, and I was like, well,
All
actually,
right.
actually, Dale, I don't think so.
All right.
Um, No, no, it's true. I mean, I think the reality is, and one of the ratios I like to look at is just the stock to bond ratio, right? The SPY to the TLT. You're using
That's
two
come in
ETFs
quite a
to
bit.
just look at the relative performance of two, key asset classes. That ratio has favored stocks for years and years. It's actually been very rare that bonds have had any sort of strong relative performance until the last month, when bonds have actually been outperforming stocks quite a bit. So while stocks, I would argue, are now clearly in a primary downtrend of lower highs and lower lows, bond prices the opposite. And so we're back to sort of that, what we assume is kind of the traditional pattern where
Yeah.
stocks and bonds move inversely. And when
Right.
stocks take a breather, bonds all of a sudden emerge as a great place to be. That actually hasn't been the case for a while, right? Stocks sell off
Years.
and bonds have sold off as well, and rates have gone up. And so, the relative safety of bonds has not particularly been there. But I
Yeah,
think
it's
it's
just been another risk asset
absolutely right. And it's
instead of
traded
a
like a
haven.
risk asset.
Yeah.
Um,
So
and
things
and I
have
think you could
changed.
argue in some ways gold did kind of the same thing, right? Gold didn't feel like a safe haven. It was kind of rallying when stocks rallying at one point. Now all of a sudden though, you have gold testing all-time highs, you have bonds actually appreciating. So those traditional safe havens, defensive sectors like utilities and
Yeah.
REITs, I would bucket sort of the bond proxies in the
Right.
equity space. All of those are actually looking quite strong here in primary uptrends. And so I think that is a notable, when you think about,
That's a
what do I
risk
see
off
for stocks? I think
portfolio. Risk off
for sure, I was going
portfolio.
to say that when you think about what those other charts are doing relative to stocks, it certainly seems like if you own stocks here, you're owning not the best charts out of that bucket of name. I mean, I think that's probably the weakest of the ones we've just mentioned. So I'm inclined to think bonds, and particularly bond proxies like utilities, make a lot of sense here. Gold as well. We've talked about gold before, and I continue to think that's from a technical perspective, it's in a primary uptrend, and it looks good. And so owning
Do you
things
like
that are
any of
going
the
up at a
miners,
time when
Dave?
stocks are going down has usually been a pretty good bet.
Do you like any of the miners besides the physical gold market?
Well, I was going to say there are a number of ways you can kind of play the gold space. I personally I own GLD and accounts that I manage, and I don't think something like the GDX is a bad play here as well.
Okay. All right.
What's interesting about gold miners is it reminds you that we often think that whatever's happening with the S&P and the Nasdaq, that all stocks kind of look that way. And in some market phases, that's actually been true, right? Where sort of everything looks kind of like the S&P, particularly in a big bull phase. But what now is one of those kind of weird counterintuitive things where the S&P and the Nasdaq have come down, but again, it's the Magnificent Seven kind of names that have really led the way lower. There are a lot of stocks actually making new highs. Gold miners it's a good chart, right? It's sort of in a primary uptrend and kind of breaking out of this basing pattern that we experienced earlier in this year, from 2023, and now, above two upward sloping moving averages. A lot of charts kind of look like that. It's just not in the areas of the market that we've thought should probably look like that. Sort of the growthy leadership names that we've followed for a while. It's other areas of the market that are looking strong. I think gold miners are a really good way to play that space here.
And how about the oils with there being the potential for supply shocks out of the Middle
Well,
East?
so I mean, if you look at the commodity space, crude oil has kind of been certainly an outlier. I mean, compared to precious metals. If you look at, generally the trend in crude oil has been at best sideways. I mean, and at worst, probably worse than that. For me, and I often get asked because I focus a lot on stocks and ETFs. I often get asked about energy stocks because they've been, kind of laggards. They've been chopping around. The question is when, should we be layering in? And my general thought is, energy stocks are tied to the price of crude oil. So if you're buying energy stocks or you're betting on oil prices going up, the fact that oil prices have not gone up to, by any meaningful degree, given the uncertainty and instability in oil producing regions of the world, I think is a big surprise to me. I would have assumed that it would be doing a lot better than it is. And crude above $80 a barrel, I think, unlocks the potential for something like energy stocks to outperform. But below there, it's just not it's not the place where oil companies tend to be making as much money and tend to be as profitable, and the charts tend to look as good. So we're really close here, and in the last week we've spiked kind of right up to that level. I have a horizontal line right at $80 a barrel to track it. We get a little bit above there, and I think all of a sudden it's a compelling place. But when you look at the commodity space again, other areas stronger.
Yeah, 83 would be a breakout from the two prior highs.
That's exactly right, and so I think getting above and breaking out of this pattern would be good. Again, it's a sideways, it's a choppy, sloppy sideways trend at this point. So from a technical perspective, it's sideways at best, and so it's again charts that are sideways at a time when others are clearly trending up or clearly trending down, and you have a bet to make. I'd rather go with those.
Yeah. I'm certainly advising against shorting it, even though I can make a case for 60, because one day you could come in and it could be in your face if anything happens in the Gulf.
Yeah.
David, your stuff is clean. Your explanation of everything. I learn every time you're here. I have a couple of things that I can pick up and add to my narratives. I think people should include you in their intelligence gathering. So I know you do a few different things. Where are the best places for people to follow your work? And
No, I
get
appreciate it,
involved?
Dale. It's always a pleasure to chat with you. Look forward to doing it again here. As one of my former analysts at Fidelity used to say that charts are the truth serum for the markets. So if you're looking to cut through the noise and the speculation and the narratives and focus on the evidence the market provides back to you, I'd certainly welcome people looking up me and my work. My website's called marketmisbehavior.com, and that is addressing our own misbehavior as investors, where we often make poor decisions, and let's give ourselves some tools and resources to make better ones. And then I'm on X at DKellerCMT, so give me a follow there, and look forward to engaging with your crew.
Okay, and catch David. You're still doing the final bar?
The final bar market recap show every day after the close on Stock Charts TV. You can find us on YouTube.
Okay. Follow David. Strong recommendation. Follow this guy. And he'll keep you straight. And he keeps his emotions out of it and his biases. And he has the discipline to explain what he sees, not what he feels. Okay. So thanks, David. Great getting together with you. Always is. Want to thank you all the years you've come in and shared your great work with us. And you and I will be talking around the election.
Sounds good. I'll look forward to it. Should be plenty to talk about, Dale.
Yeah, I'm sure we'll have a lot of lines to draw.
All right. Have a good rest of your summer. Thanks, Dale.
All right. Dave Keller, everyone. Hope you enjoyed it. It's on video. You could always go ahead and check it out. You're welcome, guys. David's here. People are thanking you. If not, what a great guy and a smart guy. Does a lot of work, not a lazy guy to do all that technical work. You have to, spend a lot of time doing it. Yeah, you like him, George? All right, so the team's available in 15 minutes on the Morning Edge. Good luck to you guys today. All right, and we'll see you tomorrow. Don't just count your pips, count your blessings. You're welcome, Victor, Sinatra, Patrick. Adios.